3. Safe Dividend King income stocks that can survive the next recession. Some savvy investors will put their money into assets that generate income. Dividends often earn a lot of attention since they represent the added value yielded from an investment. Dividend Aristocrats are stocks that have steadily grown their dividends yearly for decades. Yet, there is a much more exclusive club of dividend earners known as Dividend Kings. For a company to be called Dividend King, it needs to increase its dividend payout for an incredible 50 consecutive years. Dividend Kings know how to provide successful operations. They boost a refreshing sense of commitment to their shareholders. Several companies have recently joined the elite Dividend King club, including PPG Industries, ticker PPG, Target Corporation, ticker TGT, and Sysco Corporation, ticker SYY. Target and PPG Industries are two of the latest additions to the club, and they just made it. Sysco joined the group a few years ago. On the other hand, this compares the share performance of each company to that of the S&P 500. I will look at each of these in more detail in this video. Sysco. Sysco markets and distributes food and related products to restaurants in the U.S. for cooking. Sysco has a higher dividend yield, 2.6%, when compared to the sector average of 1.6%. In addition, the company carries a sizable 8.7% 5-year annualized dividend growth rate paired with a payout ratio sitting at 58% of earnings. TipRanks gives it a smart score of 7, which is still neutral, but analyst consensus and blogger sentiment give it a strong buy and overall are bullish. Based on 8 Wall Street analysts offering 12-month targets for the last 3 months, the average target is $93.88 with a high forecast of $100 and a low forecast of $83. The average price target predicts a change of 31.34% from the last price of $71.48. Additionally, the company's growth profile is very favorable. For example, Zacks consensus EPS estimate for fiscal year 23 is $4.20, reflecting a 30% yearly increase in earnings. Fiscal 24 bottom line is also projected to expand by 13%. Cisco current market cap is $37.3 billion, and its EPS 12 months payout ratio is $2.64. Its PE ratio is 27.90 with a dividend yield of 2.6%. Looking at the daily chart, we can see some critical levels of support and resistance. In September, we had a sell-off and are entering a fundamental level of support. The last time it bounced off this level, the share price saw over a 25% increase. Target has evolved and is now a powerhouse. They have stores across the country and offer a complete service to their customers, regardless of whether they visit the store or shop online. Target's annual dividend yield sits at a rock-solid 2.54%, notably above the sector, paired with a sustainable payout ratio of just under 43% of earnings. TipRanks gives it a smart score of 10, which means it should outperform the market. Analyst consensus gives it a moderate buy, and overall blogger sentiment is bullish. Based on 20 Wall Street analysts, the average price target is $191.75, with a high forecast of $223 and a low forecast of $161. The average price target represents a 26.33% change from the last price of $151.79. The company is facing financial challenges and expects a 40% decrease in profits in 2023. However, it looks like they will have their turnaround in fiscal 24, with estimates calling for a 50% increase in growth. Target has a market cap of about $71.74 billion. Its EPS is $8.80 with a PE ratio of 16.86 and a dividend yield of 2.54%. Looking at the daily chart, we can see that we had a massive decline in share price after the earnings call in late May. Since then, we seem to have found a bottom at the $140 level, and as of filming of this video, we are sitting in the low 150s. If we break the $166 level, we can see a run up of roughly 20% in share price based on the analyst estimates. PPG Industries. PPG Industries is a global supplier of paint, coatings, chemicals, and specialty materials. They have facilities in 70 countries and are involved with roughly 500 businesses in these geographical areas. PPG's annual dividend yield comes at a respectable 2.15%, roughly the sector's average. The company's revenues have grown by 6.5% over the last 5 years, and its dividend plan is firm. The 38% payout ratio means they could continue this plan for a long time. TipRanks gives it a smart score of 9, which means it should outperform the market. Based on 15 analysts from Wall Street over the last 3 months, the average target price of PPG Industries is $144.93, with a high forecast of $180 and a low forecast of $110. The average target price represents a 29.85% increase from the current price of $111.61. PPG Industries is leveling off but expects a 2% decrease in the next fiscal year, but estimates for the fiscal year after that predict a 17.8% growth. PPG Industries has a market cap of $26.63 billion and earnings per share value of $4.56. It also has a stock price PE ratio of 24.84 and provides a 2.15% in cash dividends annually to shareholders. Bottom line, targeting revenue generating assets is a popular strategy, and for a very understandable reason. Investors will always want more of a return when they put their money into the stock market, and dividend payers are no exception. Some offer higher yields than others, so it's essential to do your research before putting any money into a stock. Instead of aiming for companies that have gone through a peak and then slow their dividend payouts, try to target those with a long track record of increased payouts. This way, you'll be able to cultivate an income stream that is reliable and sustainable. Dividend Aristocrats are great, but Dividend Kings are even better.